Hi everyone, this is Will, aka Dr. Financial Literacy. Thank you very much for stopping by. Today, over the last 9 days, we've been using a biweekly paycheck to describe and to see how velocity banking can be used with a biweekly paycheck here in California. My biweekly paycheck consists of $1,694.93 every 2 weeks. So recently got paid on the 8th, and I'm going to share my screen, and we're going to look at the transaction itself to see what it looks like. And for the biweekly paycheck, the transaction looks like the statement that I'm working off of to reduce the credit card using principles of velocity thinking include the statement that you see before you, which is $3,687.37. The due is $144.16. And velocity banking allocates indicate that when you put your entire paycheck into a debt elimination tool or a credit card, it replaces the payment. So by putting in the entire 1694, then it actually makes the monthly payment of 144.16, and it should free up some cash flow. Okay, as you can see, I have two accounts that I have with the direct deposit. One account gets $1,294.93. Then I have the other account that gets $400 for the total of $1,694.93 every 2 weeks of a paycheck. Okay. Here you can see that we have the balance that I'm looking at bringing down on the credit card, and it's $3,687.30. And I'm putting my entire paycheck, not holding anything back, but the entire paycheck of $1,694.93. Once I move that from the checking account to this particular account, it's going to wipe down almost $1,700. Now I scheduled the payment, and I thought it would be immediately. So it should be later this evening that the 1694.93 is applied. All right, now let's get back to the whiteboard. So here what I have on the whiteboard is day 9. I received the paycheck about on the 8th. 1294.93 went to one bank as mentioned. $400 went to another bank. That gives you a total of $1694.93 as my cash. Now I'm taking that as indicated by the bank and placing it on that entire balance of $36.87. From that $36.87, I end up with $1,992.37 as the balance. It should be on the 10th or maybe later tonight. So the great thing about velocity banking is that you're interrupting the average daily balance by putting a large sum onto a credit card that you still can go back and utilize for all your bills. The payment as noted on the bank statement is $144.16, and that should be wiped out by the dropping of my paycheck and access a payment. Now here I have, and maybe you can't see it, a crude calendar that indicates the average daily balance. So from the 1st of March until the 7th of March, before getting paid, the average daily balance dollar amount was $2.67. Then from the 9th through the 21st, before the next paycheck, the average daily dollar balance that added up is $144. Once I get that second biweekly paycheck, almost $1,700, that will bring down the average daily balance to about $900 a month. And in the previous videos, we calculate the average daily balance by taking the balance of the card, multiplying it by the interest rate, in this case, 26 or 0.2649, then divide that by the number of days in the year. Because we're in a leap year, is 366 in comparison generally to 375. So the average daily balance of $9.94 for the remainder of the month is about 72 cents a day. So because I was able to chunk a large amount onto, or I will be chunking a large amount twice onto the credit card, I'm able to break down the average daily balance to lower amounts. Now I'm gonna break it back up because I'm making charges. Just came from the grocery store, got a couple of items. That's gonna go back onto the card itself. I may pick up some gas this week to go to work. That will go back on. So the idea is put as much as you can that's chargeable onto the card, and then it's going to come back out, but it's going to help you with the average daily balance. Now, by interrupting the average daily balance at least 3 different times for the month of March, I project the interest will be $47.31, because the average daily balance is going from 368 our first few days. Then we're doing a few days at $19.99. Then we're doing a few days at $994 because I'm chunking my paycheck on there. In addition to the paycheck that I don't have on here is the cash reward. So that should help also. When I get the cash rewards for the month that comes in from the different credit cards, then I'll also put that in. So that's going to help out. Now, if I just made my monthly payment of if I just made the monthly payment of $144, that would have been a balance of $3,543.14. Again, if I would have just made that regular $144 payment, then the balance would have came down to $3,543.46 with an average daily dollar amount of $2.56. Now, because I only did that once to make that payment, and there's 31 days in March, then what I would do is multiply that $2.56 times 30, and I came up with with $76.18 in interest, plus add like a minimum payment that the banks normally put in, and that was about $35. So that's $111.80 that I generally calculate as principal and interest if I would have simply just made that $35 payment. Whereas at the various points of dropping my paycheck in, there's $47, and I add $35 in 31, the minimum payment, 35, that's 1, 3, 12, 8, 82, 31. So about about $30 to $40 difference in terms of the interest saved. Now, That is different from what's the 144 that the advocates indicate that could be saved by just putting it in. Again, I'm looking at the numbers, I'm crunching the numbers to see definitely where the 144 is actually being slaved in general and to this across the board. The I got the $999 and 94 cents from later in the month. I'm gonna take out my expenses specifically. So the week of the 25th through the probably 27th, this is where I'm gonna probably take out my $300 in monthly bills because we kind of calculated that in the last one at 266. So I'm just roughly saying 300. Also 400 in daily, so that's about 700 between the both of them. That's where I'm taking that out of the second paycheck. It's going to sit for a few days, and then I'm going to take it out on the 26th. So again, one of the main purposes in velocity banking, you may take, or I have taken everything out I have, which is my entire paycheck, no holding back this time. I still got 27.55 left as cash flow from the previous month. Well, I had 190, I'm sorry, 55 in cash flow. So I've already paid the utilities except for the electricity. So I need to go back in, and the electricity will be further back built into this, but that has been paid for this particular month. So those are the numbers in general. As a recap, I have thrown the entire paycheck into reducing this credit card of 3,687. This would be my primary credit card that I charge on, put cash on, charge on, drop my paycheck on, drop my cash back on for the next 30, 31 days to see how it looks bi-monthly, and then also keep track of all my expenses, at least on this one card, to show and to demonstrate, hopefully, how velocity banking from a payroll bi-weekly perspective could work. Again, every situation is different. Every place or location, every community have different expenses in general. So definitely wanted to let you look at this in general and see how on a monthly basis I have been calculated. But some viewers, some subscribers asked about, hey, can I do something on a bi-weekly basis? And this is how it's looking so far bi-weekly. The first paycheck is just being chunked on there. It's going to knock the balance down a couple of days. It's going to give me some savings on interest in general. And it should make my first payment, which should add more cash flow. All right. Again, I am a political economist. I generally examine the relationships between society and the economy. But I've been helping with some clients and helping with their budgeting, financial coaching in general. Some people call it financial literacy. I call it financial capability, which includes me changing my behavior, knowledge, attitude, and looking at the data in terms of how I'm operating. And this is the data that I'm sharing with you. But so far, yeah, I think velocity banking has done well for me. It's reduced a number of my credit cards. I'm looking to go back and try to get a home equity line of credit in which I started, or if not, try to fall back on getting a personal line of credit so that I can pay the $156,000 in student debt and $144,000 in 3 mortgages that I have. Okay, Again, thank you very much for stopping by. Please contact me if you'd like to work with me. I have been able to purchase 4 homes, foreclosed properties, real estate, consulting, and have a couple other businesses on the side. But this deals primarily with my W-2 employment and physically going to a job and getting a check from an employer. You too can reduce your debt and improve yourself. It is what it is, but it will be what you make of it. Talk to you later. Have a great day, everybody.